Hi there, welcome to this week trade review video. My name is Kar Yong, and the start of this year, it's one of my initiatives to be kind of recording and sharing with you guys some of the trades that I've been taking and doing this on a week-to-week basis. And more importantly, I think is to really show you the real aspect of trading, and of course behind the scenes of the thought process in terms of why I take certain trades. And of course, hopefully from sharing like this, you'll be able to, number one, gain some insights from the approaches that I use, the processes that I use to analyze market and execute trade. And the second objective, I think, which is also pretty important, right, is to really show you what a real expectation of trading is, right? Because I think in social media's era today, you'll be seeing a lot of hype up expectation. And perhaps some of you have personally also experienced that kind of what we call marketing gimmicks, right? So I really want to show you, on the down-to-earth perspective, what trading really is, okay? So without further ado, I'm going to jump into my screen over here and talk about some of the trades that I've taken for the past week, okay? So allow me to very quickly put this aside. Now, for me, I do have the what we call a trading plan, right? Which is, I think, is very important because in terms of every trade that you're taking, you need to have a proper process, and of course journaling, right? So you can see historically what are some of the trades you take. You can always reference back to help you remind yourself what are some of the mistakes, or what are some of the things that you may want to work on and improve. Okay, so last week itself, I took 5 trades, starting from here, pound Aussie. Okay, so you can see this was 12th of March, which was last week. And then the previous all here 5 trades are the ones that I've executed and taken last week, right? So I started the week with a losing trade, okay, pound Australia over here. But this was actually more of an aggressive trade, trying to catch the inner structure within a retracement itself. And most of the time when you're taking more of an aggressive trade, the probability is a little bit lower. Okay, but at the start of the week, there wasn't much of an opportunity that I can really focus on, and I say, why not? Let's look at it. Because aggressive trade doesn't mean that it's definitely going to lose. It's just that, maybe the probability is not as high, but in terms of risk to reward ratio, it's still there, right? We still have an edge if you're able to execute it with discipline over time, right? We're still being able to make money, right? Even though some of the trades are going to be losing. Okay, so I started the week with a negative 1R, right? And after that, we had a dollar Canadian trade in the midweek. And this trade here hit the target very nicely with a 1.67R. Can't miss out the R over here. So what it means is basically, I lose if I'm putting 1% per trade. Then 1R equivalent to 1%. Then 1.67 basically means 1.67%. Right. If today I'm risking 2% per trade, then 2% equivalent to 1R. Then of course this trade I'll be down 2%, and this trade you basically use 1.67 times 2. Right. So that's the concept of risk to reward, and you can see why is it important, right? Because for this entire week here, the remaining is 3 break even. I have 1 winning, 1 losing, right? So it's a 50-50% probability in terms of win and lose, but I end up the week with a positive return, right, because of the risk to reward ratio. So I'll be jumping into a little bit detail in terms of why we took the dollar Canadian, so you can actually learn something out of it. Okay, and then I have the Aussie yen to do a little bit of review and share with you guys here as well, because this trade I exited at break even, but the market is the market, right? Eventually that trade actually went and hit my target. But it is what it is, right? And I just really want to show you the real aspect of it, right? Not all trades are going to be winning. Looking at hindsight is always easy, but this trade itself is really what it is, right? And I share this with our members over here, right? So they can actually also learn from the trade plan here on a daily updated basis, okay? So very quickly, let me jump over to the charts over here, okay? I'll talk about the Aussie yen first, and then we'll dive into the dollar Canadian trade, okay? So you can see, right, this was the Aussie yen trade. We got tagged in. Okay, we got tagged in over here, bounced a little bit, and then I moved it to break even. It came back, tagged the break even, tagged the demand zone very nicely, respected that, and eventually hit the full target of potentially a 2R return, which is great and fantastic, right? But to me, it's a break even. Okay, so let me walk you through, why I was looking at this. Okay, so backtrack a little bit. Okay, when I was looking at a trade, taking the Aussie yen, the reason behind it because we have this three-wave principle completed. We saw an initial decent bounce off the market. Okay, so giving us a V-shaped formation, and the thought process over here is simply if we can get a pullback, at least we are expecting one more push, right? Again, based on the three-wave principle. Okay, so I'm actually interested in the short-term upside. Okay, and of course, going back to this here. Okay, before the trade was triggered, we can also see on the lower time frame we have a three-wave move, right? And of course the market broke the previous high. We're expecting kind of a pullback. We do have fair value gaps, and therefore the demand zone is here. Okay, utilizing the order flow technique, waiting for market to pull back, and then that's where we look for buy, right? It's a very simple process, but I think the principle behind it, the setups or the framework I always share with traders, right? For me, the approach I use based on the framework called DSC, identify the direction, identify your setup for execution, and then add in the element of context to see if this trade is indeed worth taking. Okay, and that's the part where I took the trade, right? And of course, I exited on break even. Okay, so it is what it is. And then of course also allow me to jump over to the dollar Canadian to walk you through, because this trade is great, right? This is actually one of the only trade that kind of end up profiting for the week for me. Okay, so it's very similar principle over here, right? Kind of, if I use the replay back button a little bit, okay, we were taking this trade early to midweek. Okay, and back then what we're seeing is basically this, right? Now we do have a strong momentum push down. Okay, and what I saw is an initial reaction. Okay, and again, based on the three-wave principle that I've been kind of talking about, we are always expecting the market to develop in sets of threes. Okay, so if you only have a pushback here to the upside, right, as a minor first sign of a retracement, we'll naturally expect it to develop in sets of three, right? So we have one move up, one push down. We will always expect a three-wave move. Okay, before completing perhaps this as a correction and then the downside. Okay, and again, based on that, it's also a 1-2 trade, right? So at that point in time, that's where I was thinking, okay, short term, we may have an opportunity to look for the buy. Okay, now it's consider what we call a more aggressive technique to get involved in the trade, because we are trading the internal structure and we are trading the counter trend, because the higher momentum is down, where we're looking to buy. Okay, so it was a buy trade. Okay, now going down to the lower time frame, okay, backtrack a little bit. This was the setup that I was looking at when we were looking to execute a trade. Now this technique and this setup here is slightly different from the order flow technique, right? So basically I have multiple setups that I look to get involved in the trade. This setup is a very simple Fibonacci based, Elliott wave principle based kind of setup. Okay, so just like I covered, right, on a high time frame, we're expecting one more move to the upside. So on the lower time frame, what I did was to pull Fibonacci, swing low to swing high. Okay, and this trade in particular, I was looking at the 618. Okay, and where would I put my stop? My stop would naturally be where that previous swing low is, right? So we're looking to get involved in the market pullback correctively towards the 618. My stop will be previous low. Okay, and of course, where's my target is going to be very conservative. Going back to a high time frame, we'll be basing it on just the higher time frame 61.8 Fibonacci retracement, right? So that would put us around like 3535. Okay, so if you kind of look at this here, you can see it's about 1.7, 1.6, right, kind of range, right? And therefore this trade actually played out pretty well, right? So if you kind of play it forward, okay, you can see it tagged our entry pretty neat, and then after that the market decides to just bounce off very nicely, hitting targets and ending off the week somewhere around at the top. Okay, so it's a very solid trade. And of course I do have a couple of crypto side of things over here. You can see it's basically break even. Nothing much to talk about it. We kind of got tagged in, had a decent move, and then we shift stops to break even as part of our trade management plan. And then the crypto market kind of like before the weekend, on Friday, right, the crypto market actually made a significant pullback, right? And of course we're looking at buying XRP and LTC. So we got out at break even when the pullback happens. Okay, so I hope this video here kind of give you a little bit of an insight in terms of not just the strategy specifically, But I think in terms of the entire process of trading, as a trader, what are some of the things we do, right? And I want to be as authentic and down to earth as possible, right? To really show you what's the real aspect of it. Now, obviously, I would not be profitable week after week. There will be some weeks that perhaps will end up losing. Okay, and I just want to be as transparent as possible in this kind of review video as well, and hope we can connect better, and I hope you kind of like able to see where I'm coming from and benefit from it as well. Okay, so that's all from me for this video. Let's look forward to the new week and see how the market present us with various opportunities, and of course wishing all the best for the new week to come.